And welcome to the TriggerCharts pre-market rundown for, where are we? May 8th. No, that's not May 8th. It's May 15th. I'll change that on the top there. May 15th, 2020. I'm Andrew Horowitz and one of the co-founders of TriggerCharts. So thank you for joining us this morning. We'll talk about a variety of things that are affecting markets. We know that we opened up early this morning with some really crazy news from China once again, and then tack on that with some retail sales numbers, which we'll get to in just a second. Plus, we're going to talk about your stocks, things that are of interest to you. So make sure that you hit us up in the chat right there on the bottom. Somewhere it should be blinking right now with your Zoom panel. But let's kind of talk about a few things before we get into that. As we always do, the quick and down and dirty disclaimer that investing involves substantial risk. This is not a recommendation to buy or sell any security at all. Of course, it's for educational purposes only. So I want to make sure that everybody is keenly aware of that. So with that, let's kind of get a quick update. We got the Dow Jones futures down about, 200 points right now. The SPOOs, or the S&P futures, down about 27, almost 1%. Qs down 1.4 on that news that China may be retaliating against some of our technology companies after we went against their major technology company, Huawei. So a lot going on there. We also have some finger pointing this morning and some blame game going on, as well as some serious accusations against China from Peter Navarro in the White House, talking about how, well, we caught them red-handed trying to steal vaccine information and coding and other information. And that's a red line that he says that's a problem. So futures are acting a little bit wonky here, and you wouldn't expect anything different, especially after that major stick save yesterday. I think the big thing that we need to talk about right now, and I think that we need to express, is that reality is seemingly starting to set in after that really nice rally that we had. That, hey, maybe it's not so bad rally. Maybe, well, you know what? We're at a discount. Why not buy in rally? That there are some things that are starting to come in, like the extension of many of the lockdowns, the elongation of the stay-at-home orders. We saw from LA this week into July. I heard yesterday from some people, they're thinking it may not be open until August. So we have that going on. We have a bit of a spike in hot areas in South Korea, Germany, and the reopenings of some places in the U.S. may, in fact, give us some problems there. Yes, Kevin, I did do this disclosures. Thank you very much. We talked about that right at the beginning. Couple things I want to mention before we get any further. In the chat, you'll also see that there are a lot of training videos. We do a lot of tutorials to give you really good insights on how to use this. And I want to thank everybody who gave us the reviews, these just fantastic reviews over on the TradeStation Trading App Store platform, how it's helped you really make money. It's helped you save money. The Commander Series, the Aileron, even the free ones that we have available for you that help to train you, like the simulator, and also the KRI indicator, which is a subscription-based but very inexpensive, that gives you the overall action of the market, where those severe oversold and overbought levels are. So thank you so much for all those great reviews and the emails. The emails are really good. I mean, I've been getting, seriously, a flood of emails over the last, I would say, 3 or 4 weeks about people that said, I decided to kind of pick back up on my trading where I left off because I was really concerned. And I mean, generally people are saying that it's made it a lot easier to trade. So if you have not, and I'm pressing you on this, if you have not at least done a trial, which is totally free, a 10-day free trial of the Commander Series or the Altimeter or the Aileron, you should do so over on the Trading App Store. The other thing I want to mention to you, and I think that I mentioned this a couple of weeks back, you could do it for free. What I mean by that is you can open up a TradeStation account, I think with as little as $5,000. You don't necessarily have to trade it. You get the platform for free, and then you can do all these trials. So I think that's a pretty good thing that you could check out over at TradeStation. So check that out. If you need any information, send us an email at info@triggercharts.com. All right, so I'm going to bang through this because I want to get to some charts. I have some really interesting ones to show you. A couple of things. Let's talk about the valuations. Now, we talked about this many, many times, the PEG ratio, the PE ratio. I have some, probably can't see this here, but you can see, take a look at that. These are these PEG ratios. That's the PEG ratio. Here's the PE ratio. I'm not sure if that's showing through right there. Let's see if I can, right there. PE ratio. Obviously, I'd put that on the chart, but I don't have it up right now. Bottom line is we have a very stretched valuation that's going on right now. And with those stretched valuations, the concern is that, how far can we go right now without any indication of what the future earnings are? Even if we look at where the earnings are expected to be, like, 150, if we get back to the all-time high at 160, if we surpass it at 175, even in 2021, even 2022, we're still trading at 18 to 20 times future earnings. A bit unrealistic, considering the fact we are in a recession, and it could be an elongated one. Had questions from clients yesterday talking about, is it an L, is it a U, is it a V, where are we? Well, the best guess that I can give you right now, it is not going to be a V from an economic recovery. Maybe a W, small w. Maybe it's going to be probably most like a U shape. So that's what's going on right there. Technical indicators. Also, we're getting a lot of interesting looks at support levels, bouncing off that, holding, breaking out. I wouldn't say so much right now, but I would say that in general, when we look to the chart on the right here, looking at some consolidation. And the ranges, this is what's really interesting. The ranges are wide. I mean, look at this consolidation range that we're talking about right here. I'll kind of draw that again. 126 to 137. We're talking about a 10% range, and that is pretty substantial when we talk about a consolidation range. Right now, this is the SMH, and I brought this up because this is what's going to be probably in play today as one of the key areas that are going to be affected by the back and forth banter with China. I think what right now is happening is that we are trying to break the phase one skinny, partial trade deal that we have out there right now, because China has not been necessarily buying all the things that they said. We're really not happy about the fact that we didn't get the technology transfer and the intellectual property issues in there. And I think what we're doing is going after them, and a perfect time to do so with regard to some of the technology and in this environment right now. Why not blame them? Because now we could throw it into the whole blame of, you guys caused the problem. This originated in your country. You didn't provide us with clarity or information about what's going on. And what's happening now is I think that's spilling over into the trade deal. And then we're going to try to renegotiate this and use the step on the throat methodology with regard to not only tariffs, but the trade deal that was put in place. Because now we could easily say, you know what, China, you broke that too. You're really bad. We can come at them pretty hard. Not going to be good for the global environment and for globalization by any means. The chart on the right here shows the SMH. This is the semiconductor ETF that a lot of people look at. Right now trading down about 3.62% in the pre-markets due to the fact of this news, not only of Navarro, but we saw early this morning back and forth banter from the official hardline newspaper in China, as well as their secondary, more conservative, more, I would say conservative leaning, but less hardline newspaper, talking about how they would put a clamp down, not buy products from companies like Apple and Qualcomm and Boeing. So that's kind of causing some problems here, but the semiconductors are a major player in that whole genre. So this is what's happening. Currently trading at what, 129.40. I got about 127.76 is a line in the sand that you need to look at. Came right down to that yesterday, and you can see that right here on the right. And what happened is that it popped right back magically, a bit of a stick save yesterday. Beyond that, I think you have to look at this area right here, kind of 126.10 as a level that's really important there. Below that, really, I don't see anything. In fact, you kind of have this range. There's a little bit here, but not much. So I think that you really have to watch that very clearly. But this is right now in the crosshairs. The reason I bring this up, it's in the crosshairs of what's going on right now, the newest of headlines. And you do have headlines that are pushing and pulling everything that's going on. Large stocks have been holding up really well. You saw the indices that are market cap weighted, like the S&P 500, the triple Qs, do really well. I mean, the Dow has come up as well. Small caps, the banks, travel-related, leisure, entertainment, doing horribly. As a matter of fact, some banks crashed below their reaction low from March 23rd just a couple of days ago. We saw that the cruise lines, the airlines, crashing below the levels that were put in place on March 23rd. So we're seeing that react, and those particular areas, and everybody's saying, hey, that's an isolated situation when it comes to the area of entertainment, travel, restaurants. These are the areas that are feeling the most pain. That doesn't mean it's not going to spill on to the rest of the economy and to the rest of the stocks, but right now the play has been, hey, let's keep away from those and keep on pounding our money into the technology and the biotech stocks that's going on. And that's why we're seeing that the healthcare and the biotech is very strong right now. This week we saw initial claims of, what do we have, 3 point something million. Right now I'm estimating that the unemployment rate is somewhere right around 20%. We closed last month at 14.7. We put a lot more on the unemployment list, and a lot of that is due to the fact that there's a second wave of layoffs that are happening already. The PPP did help out, but there's a second wave that's happening, and add to that all the people that couldn't get on the unemployment sites to actually put their claim in, it's causing a continuation of this. Hiring, anemic. Maybe a few people are being brought back for some reopenings, but very, very slightly. So we may see over the next few weeks that unemployment number start to slow down. The initial claims will probably start to slow down. I wouldn't expect it to go back to just 200,000 anytime soon. Probably in the neighborhood of maybe 1 million, maybe 1.2 million, maybe 750, that kind of range over the next couple of weeks, then being brought down a little bit as we pretty much exhaust all the people that were laid off or could be laid off at this point before and if there's another wave, which I don't necessarily see happening unless the end of the payroll protection program runs out, which is 8 weeks from the date that people receive their checks. So you count 8 weeks from there, and you kind of slow down the unemployment, the firings, if you will, the furloughs, and then you get into a situation where if there's no more money left and business isn't there, they're going to let people go. CPI and PPI, horrible record after record after record. Today's retail sales, negative 16.7%, negative 17% if you exclude core auto, and that's a record move on a monthly basis. CPI and PPI, deflationary, expected to be deflationary. That's right, same thing. And we'll see at 10 o'clock today, the UMich. Underlying bid is constantly there in the markets right now. Even on this bad news, you're only pressing it down 1.5% to 1%, depending on which market you're looking at. Next week, we have housing starts, crude inventories, again, initial claims, and the Philly Fed. We're going to talk about a variety of stocks right now. Do me a favor, inside of the chat box over, I'm going to click it here. See that? Put some stock symbols because a couple of people were complaining last week that I didn't give them any actionable ideas. Well, I'm not going to give you actionable ideas, by the way, because this is for education. Utilize what I'm talking about to then augment your particular research that you're doing for ideas on that. Ways to get actionable ideas, by the way. If you're looking for how to get that, let's talk about that. Here. Nope, that's not it. That's not it. Let me see if I have it. There we go. This one. This screen. So what this screen is the movers, the hot list. You can add the hot list by going up to your apps here and going over to probably H, which it says hot list. See that hot list? And adding a hot list. You can add multiple. What this hot list right now is percent gainers 1 day, taking into consideration pre and post market. So right now we have Bridgeline Digital up 87%, Sorrento Therapeutics up 60%. Very exciting, right? Okay, great. This is pre-market. Look over here. We have Creative Realities and Top Ships on the downside, Novio kind of going down the list. So you can get an idea. And this changes every so often and starts to apply itself. So you can take some of these and look what is the most traded, look to how many trades were done, look at the volume, and see if that's something that you want to put on your watch list for the day. So let's take a look at what I got on here. Wells Fargo. Stick save yesterday. Rumors that Goldman Sachs is going to be buying them. I don't know about that. I don't think that reality is really happening. But nonetheless, if you look to the right-hand side, the chart here, I mean, look at what we're talking about here. They crashed down. This is, back to the lows that we saw here at 25.20. Yesterday, they were low as about 22.27. And then miraculously, there was the rumor that Goldman Sachs would probably be buying them. Therefore, holding off any of the sellers from crashing this any further. It doesn't seem logical. I mean, it's just a rumor. But it did stop its fall in the tracks, and Wells Fargo is actually up 8% on the day. You can see the coloration of this is red, which is after a yellow. Yellow is an alert either for a long or a short using the autopilot. Let's zoom in here and kind of go through something I want to show you. Right here. Let me mark these really well for you so you can see these. Right here, that was a short alert. On the next bar, this is daily, it calls for a confirmation. It confirmed the next day. It moved out here actually because it started to move above, but then reconfirmed the next day after that. And then you had this really beautiful run all the way down from what? Let's talk about 47, and you would have closed your position at about $28. So that was about a 20-point move or a 40% move on the downside that you would have capitalized on if, in fact, you were watching this chart correctly. Putting aside all the other things that you're looking at, just looking at the autopilot. Simply, the autopilot is giving you indications of when we are at a level above or below a altimeter, which is a further algorithm that we built on the market profile. So when you're looking at this, you could see that very clearly there is the opportunity to find upside and downside just by the colors. Now, that's just one thing to look at. There's multiple factors that you want to kind of check out to make sure you're getting confirmation. For example, on the bottom, the aileron, which I like to use, not everybody likes this per se, but okay. It's just an add-on. It's a couple of bucks. The chart version, I think, is $29 a month. So you add that together, you're talking about $170 a month for the Commander Series, entirely all the indicators on the Commander Series, as well as the aileron. 170 bucks a month. If you can't make $170 a month in profits on one trade from this, we got problems. You shouldn't be trading, frankly. That's why we built this, to help your profitability. You can't scratch your head and wonder. You follow the process. Very simple. You look for when there's a change in the coloration. You look when there's a look to the left, where there's a hole, where there's a fast zone, and bite into that trade. You don't worry about, was it short, is it long? Just what is it telling you to do? That's what you do. Now, let's go to the end here. Let's go back here. End. You did get a little bit of an upside move here. You got in somewhere around, I would say, about 29. Got you out at about 32. Doesn't seem as good as the last one when you had a 50% move. But if you were just playing this stock alone over the last, let's just look at this. Let's take a look. If you were doing this since, I'm going to keep on moving this up. Let's just look at this stock here. You would have bought here at about 48. You would have gotten out at about 51, bought in again about 52, got out about 54, consolidated in and out, in and out, in and out, nothing really happening, no loss, no gain really to speak of. Major win here. So you got major win, little losses, little gains, small, nothing going on right here in this whole range up top here. Nice gain here. You got a nice short from 52 down to about 47. I'll take that every day. Then you got, again, consolidation, nothing happened, a lot of gray, don't get in, don't bother, don't look at it, wait for that to move. And this is just the daily chart, by the way, for swing traders. Then you got this massive move down. So if you look at this looking backwards and you're trying to learn and you're trying to understand what's happening, aside from looking at the smaller details where you put on, for example, when you start looking at the radar. Radars tell you a lot. Yes, there's no question about that. But we have put the algorithm on the autopilot based on the market profile, which is the radars, based on our swing calculation, which is the altimeter, and then you use that in line with your aileron, which shows you that we were in a negative territory and the momentum was all to the downside. I mean, there was nothing really to think about here. There really wasn't. There was nothing to think about. This played out. To be honest with you, I picked WFC because of the nonsense that's going on with their movement over the last couple of days. I didn't look back at exactly what this whole pattern was, but it's very simple to see. SMH, again, another one. Look at the same thing. You have green. When you have green, you look to buy in. And obviously, depending on what your time frame is, whether you're looking at short-term or long-term, I've gotten a lot of calls recently about using this on a 1-minute chart or a 5-minute chart. Let's take a look what that looks like just for a second. You could do this. It works fine, but the fact of the matter is on these kinds of charts, you can see some good returns, 131 to 133, 133 down to 129, these moves. But there's a lot more choppiness in there. You got to be faster, much faster on a 5-minute chart. And let's not even talk about a 1-minute chart. Yes, you can make money, but remember, these are minutes. And minutes constrain a lot of things. So, okay, you had a nice banger right here, right, which is get the move from way below up to 0 and above. You got a support line that held right there. You get a bounce above. You went from 130 Very nice from 2:40 in the afternoon to 1:32. So what was that? So you get 2 points. I'm looking for the bigger moves, even on a 30-minute chart, which can get very choppy. I personally like doing swings on the daily chart. I think that's much more information at my disposal right there. Weight Watchers, I just thought this was interesting. I think it's got some really good support here at about 22, I would say about 22, we'll call it 22, 22.10, somewhere right around there. Really good opportunity on the downside to make a good short right there, bounce back up. Now it's starting to consolidate in a range above its level. We got a good aileron right here, which is giving us some indication that the momentum is on its side. And then you got some upside potential that it got knocked down right about here, right at its point of this little island right here. But I do think that the potential is back to about 31 on this. That's a good move from about 23 that possibly is there. IWM trading down now about, about 1% at 121.87. So you're still above the line that is a major support, which is right there, the 120.90, right on it. Very weak index, very, very weak. Really hasn't recovered very much compared to, there's a little bit of a V here. Hasn't compared. The momentum is starting to die off and roll over right here. I would just keep an eye on that and be careful on your small caps. XBI, of course, has been the biotech level. The ETF has been just off the chain, hitting, I think, an all-time high. Yep, right there. You have some good support right there on the 97.99, currently trading at 98.40 in the pre-markets. This is going to be a COVID play. This is the perfect place to try to find a vaccine, etc. I think this is going to be an issue of where we are in terms of the level of excitement over a vaccine. I think there's a carrot hanging over this particular industry for some time. Hertz going out of business. That's what that looks like. SHAK. I just thought this was interesting. We're in a little bit of a range here right now, trading down about 1.3% at 47.66. Let's mark that exactly on the chart. 47. There we go, right there. Right below and staying below its resistance level. And I think that's an important thing. It tried to get up there yesterday, stopped dead on it. If you look at this really closely, stopped dead on it right there. Broke below, came back above. I think you got a lot of weakness, especially with meat prices being what they are. Clearly down to about the 42 range. I would not expect that would necessarily hold. But you got some there. You got some just top line, probably at about the 45 as well. Yesterday stopped dead on some support at about, about 46.15. You start breaking through that, though, you got big problems there. Planet Fitness still got some room to the downside, it looks like. I would say down to about 39.12. There's some really good support right there. Right now trading about 45.50. Look at the bottom here. This is something I drew on, that the aileron is starting to roll over pretty hard from a momentum basis. And we saw some decent move on the upside, of course, from the March lows, which you'd expect, and then it moved down. Couple others. This is Norwegian Cruise Lines. I mean, you want to play this at your own peril. This is a classic L shape. Let's kind of zoom out on this. L shape, where there's some really good support down the bottom. You break through that support on the bottom, though, the problem is there's an issue of solvency right here. Not liquidity, solvency, whether this company is going to be here for a while. There's a quick question. It says, yellow or orange candles are the indicators for movement. Does one or both indicate the uptrend? No, not at all. Not at all. So let me make this clear. A yellow, let's just focus on yellow, forget orange for a second. Yellow is an alert saying that we're going to break out potentially or break down. It says that if the next bar confirms, that's the indication that there is a potential trend happening or a position change or a bias, we call it. So look at this very carefully, and we can see it's right here. Yellow bar, right? So you said does one or both indicate the uptrend? The yellow is just an alert that either an up breakdown, not trend, breakdown or break up is happening. In this case, the yellow turned into red. Once we lock in the close, the next bar is going to open up in that direction. We're below the line. We're below this line, below the green altimeter line. Forget about everything else. Forget about the the radar, everything else. What we have here, and even just take off, let's just take off the altimeter. All we see, all you could look at is the color. I trade on the color. If it's red, I go short. If it's green, I go long. If it turns orange, like we see, if I can get my little jobby here, orange, that was, hey, take your profits and move out. The orange are a profit watch. What it says is, hey, that trend may be over right now, but you know what? That doesn't mean it's ended. That means that right now we hit a level, and if we look at this again, and we look at the altimeter right here, we got a new altimeter that was drawn, and what happened was that it got us out because it did see a tick higher. So here you went short theoretically at 51. You got out of it right at about 34. Not bad. And then you kind of a couple days in and out, and then it turned back into another short situation. The trend on this is down. Playing this on the upside is only, in my opinion, for a day trade. It's only for a swing, possibly. It's not, well, or for a really long-term hold that you think, hey, you know what? 10 years from now, things are going to be fine with this. BLK, there's a question on from Steve. Let's take a look at that. BLK, BlackRock. You know, BlackRock is going to be dependent all on the markets. I mean, if you overlay the markets on BlackRock, it's all about their assets and asset size and their various ETFs and how much assets they have coming in. So if markets are up, BlackRock's up, pretty much. Markets are down, you overlay the S&P on this, and you just put an SPY, it's going to look pretty much this. Look, doesn't that look exactly the same? Do it again. Really? Watch quickly. Ready? Looks the same. BlackRock, SPY. Nothing exciting there. If you think that the markets are going to go higher, more people are going to be utilizing ETFs, more people are going to be investing, then BlackRock, fine. But I don't know why you can't use the SPF for that, SPY for that. MDY, somebody asked me about. Let's take a look at this. Yeah, these are the mid caps, just as weak. And let's look at the IWM, kind of saying kind of the same situation. IWM, though, had an indication to get long for a while. This is back in the short mode. Had a nice little recovery right there. Again, you know, you can see very simply, a yellow indicates that there is a bias. This is the bias now turning into a short bias. Below the line, you don't go long. Above the line, you don't go short. Above, this is below green. This is green and blue at the same line here. Below the line, short bias, you don't go long. Very simple. Above the line, above resistance, the red line, you don't go short. Very simple. If you don't want to go short, okay, fine, but don't go long. You know, you got the momentum that goes down. You add that to the aileron, you really start to see momentum in this. Who else? ARKK. Is ARK Innovations. It's basically is Tesla. It's all the major hoo-ha stocks that are in there. Really, this is, I think, a proxy for high-tech, biotech slash COVID type stuff slash Tesla. They own a lot of Tesla. And if you watch the CEO and the investment manager for this fund, they think Tesla's going like $7,000 a share. A little bit nutty, but then watch what they sell. They sell a lot of stuff along the way. Very difficult to really, look at this one. I think that you could use technical analysis, but I'd rather go with individual stocks than this one because this one is just a managed. This is managed ETF, so it's not an index. MRK is the last one we'll talk about today. In a major level of, I would say, consolidation. I mean, look at this range right here, 75 to 83 right now, trading a little bit up pre-markets. I would wait to see if you can break up past the point of about 84, see if there's anything there. But you got a lot of just junk happening over here. So there's a lot of upside resistance right there. Downside potentially has some downside to about 70. I would say here, if things fall apart in the markets a little bit, we are seeing the first signs. There's a nice little move to the upside yesterday. I would venture to say that this is probably going to consolidate for a while. There's nothing here that really shows me anything different. I want to thank everybody for joining me. We'll be around again next week. Don't forget the Disciplined Investor podcast is on this weekend. We'll have some great discussion. We had a great fundamental analyst on last week, also DH Unplugged on Tuesday nights. And I will see you again next week. So thanks so much for joining me. I'll see you again then.